Now that we have discussed how banks make money, it is worth going over exactly what products they offer. If you use banks the right way, they can drastically simplify your life. But if you make small mistakes, they can make your life miserable.
Do not worry. I am a PhD student, so my life is already miserable.
Ay, 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 ay. Today, let's go over the main types of accounts that you can hold at a bank: checking, savings, money market, and CDs. A checking account is designed to handle cash inflows and outflows. Checking accounts normally let you withdraw or deposit money with very few limits, and spend money directly from it using a debit card. If you prefer the arcane art of writing checks, these will also transfer money from your checking account. A savings account is designed for money you are not actively spending and are likely to save. The big advantage of these types of accounts is that they usually pay interest, which means that you can make money just by leaving your money there.
My bank saving account only pays 0.01% in interest. How does this even make the slightest difference?
At that rate, to be honest, it really doesn't. That's why you should get a high yield savings account. This is just a normal savings account that pays a much higher interest rate. Not all banks offer these, and some that offer them do so with conditions, but when you can get one, you can do much better than a 0.01% interest rate. The actual rate changes over time depending on the economy, but my high yield savings accounts have interest rates of around 4.5% as of April 2024.
Is that really worth it for people who ain't earning much? Let's do the math.
Oh no, why?
My student jobs pay $10 per hour, or $20,000 per year, or about $1,600 per month. If you spend this evenly throughout the month, your average balance is $800. At an interest rate of 4.5%, you have just made $36 extra this year. Given that your wage rate is $10 per hour, this means that as long as it takes you less than 3.5 hours to open your account, the investment of your time will pay off within the year. If I can be paid that much interest with a high yield savings account, why would people ever get normal savings accounts or checking accounts?
Because most people do not think to look, or know how to make sense of what they see. When opening a bank account, always look into several bank options and choose the best one for you. Ask your bankers questions. And don't hesitate to have several bank accounts as well. The one caveat to savings accounts is that they often have transaction limits. There used to be a government rule forbidding banks from letting clients have more than 6 transfers of money in or out of their savings account in any given month. The Federal Reserve removed this rule in 2020, but many banks have kept this restriction. So I'd recommend using a checking account to receive and send money, and then transfer whatever you can into a high yield savings account once a month. Third, we have money market accounts, or MMAs. These vary a lot bank to bank. They usually offer a higher interest rate than normal savings accounts, but not always as much as a high yield savings account. Money markets, like savings accounts, often have transaction limits, but they sometimes let you issue checks or have a debit card like a checking account.
So it's basically a hybrid account that really depends on the bank.
Spot on. The last product that we'll go through today are certificates of deposit. When you open a CD, you are locking your money away for a set period of time, typically between 6 months and 5 years. So you cannot access your money during this time without paying a penalty. However, CDs can give you better interest rates than even high yield savings accounts, and the interest rate is locked, which means that even if interest rates fall nationwide, your CD will still pay the same amount.
Okay, so I will only put money in a CD if I am sure I won't need to touch it for a while. Are all of these products safe?
Yes, as I mentioned in the last video, all of these products are FDIC insured up to $250,000 per financial institution. So your money is about as safe as you can get.
How do fees differ between these products?
It really depends on the bank. I have given you a high-level overview of the types of accounts out there and what to watch out for, but you'll still have to do your own research. When you open an account, always get a list of fees from the banker helping you, and compare multiple options to make sure you get accounts that do not charge you any fees. So, what are the takeaways?
Handle my everyday spending with a checking account. Open a high-yield savings account or a money market account as well to store the money I am not actively spending. And if I know I will not need cash for a while, put money in a certificate of deposit. And do lots of research to compare my options and identify hidden fees before opening my bank account.
Congratulations! You've just learned the basics of bank products.